get some insights on the news shaping the markets. For that, we welcome in Thomas Martin, Senior Portfolio Manager at Globalt Investments. Look, we've had, as I was just talking about, the back and forth, and that's really what we've been seeing, right? The S&P is a little bit higher this week. The Nasdaq's lower this week. I mean, the small caps, forget it. They've been extremely volatile. What do you think about this kind of market? Where do we stand?
Well, thanks for having me on, Nicole. And what we're seeing is the markets are near all-time highs. And so, we've seen a little bit backing off S&P and the Nasdaq, as you said, but we've had quite a run already this year, 8%, 10%, and some of the momentum names up more in the mid-teens. So you've really already had a full year's worth of average returns in a couple of months here. And I think that that's making people nervous, and the momentum trade itself. Some of these stocks are up on polls. And I think the riskiest parts of the market, as you said, is the guidance, but also just the fact that a stock has been up and as strong as it is. People are taking profits and looking for other areas where they can find a good story that is going to be growing, but that hasn't had quite the run of some of these other bigger names.
Yeah, and I mean, an example of that would be some of these names in the Magnificent Seven, names like Apple and Tesla that have really sold off. And, we've had on guests who say, look, I still like those for the long term. I mean, Apple in particular, because of its big picture story and its ecosystem. And so saying that there is opportunity. I mean, when things sell off, do you find that there's opportunity? Do you have some examples?
Well, there is opportunity when things sell off. And the most difficult thing is really understanding about the underlying fundamentals, what's driving those, and trying to put some sort of a timeline on when that is going to improve. So you mentioned Tesla, but they still have a difficult slog ahead of them. And some of the underlying fundamentals with the slowing down of the early adopters and of adoption of the vehicles, et cetera, may make that timeline a little bit longer than people are comfortable with, and that could get pushed out. Apple, on the other hand, may be able to recover sooner. If you look at some of the semis, in particular, one of the names that we've liked and own is Micron. And that is one that hasn't moved as fast as some of the other semi-cap names, but that does have an improving fundamental environment and does have potential exposure to AI.
Yeah, that's interesting because, as you said, it's not moving in the same way, in the crazy way, AI craze. I mean, you use NVIDIA in your notes, and there's been a lot of talk about the market being overbought or NVIDIA being overbought, but less so for a name like Micron, right? Because you do see a growth story there.
Absolutely. The growth story with NVIDIA is well recognized, and that doesn't mean that it doesn't have more surprises ahead of it. It's just that it has moved so far so fast, and it is in the thick of things. The NVIDIA hiccup that we had a couple of days ago where it was up 5 and then down 5, really, I think, might have scared some participants into saying, do I have the right exposure here, and where else can I go with other areas, and not just in technology, but also in some of the other areas that are starting to see some signs of like consumer staples or consumer discretionary, et cetera.
Yeah, and it's interesting because I saw that you talked about the consumer is still spending. Sentiment came in a little bit lighter today. Retail sales were a little bit lighter, but we know people are spending. Okay, maybe they've cut back a little bit, but they're still spending. To your point, staples would be what you need. Discretionary may be what you want. What kinds of names within staples and discretionary would you pick over others?
Well, we've been fans in the staples area of some of the standard retailers, Costco and Walmart and Kroger. That sounds very grocery heavy, but those stocks have done very well, just sort of plugging along. And Procter & Gamble had a good quarter, I guess, better than feared. But the idea there is that the unit growth that they're getting is not tailing off the way that folks had thought that it was, and they've been able to maintain their margins a little bit better than they thought. So that stock's been perking up. And then in the discretionary area, companies like TJ Maxx which benefit actually from the trade down of higher end consumers into their area instead of seeing the low end consumer who's having more difficulty and struggling with their purchases and actually cutting back. So we like that name in that area as well.
Yeah, yeah, understood. So you really have a wide variety when you go from Micron, Costco, Walmart, Kroger, which is in the grocery space, which makes sense. Procter & Gamble's things people need, and TJX, TJ Maxx. You did talk about earnings overall for companies. Do you see growth in the back half of the year? I mean, we'll have an election year. The Fed will likely cut. I'm sure you're expecting, I don't know, a cut, one cut, 6 cuts. I don't know where you stand on that. But tell me about the back half.
Yeah, well, the back half is where all the action is, and investors are totally focused on growth. And the fourth quarter came in at about 4% earnings growth broadly for the S&P 500. It looks like expectations for first quarter are about 3.8, probably come in around 4%. But for the year, we're still at above 10%, actually above 11% for the full year, which means that there's an acceleration coming in the third and the second, third, and fourth quarters, and then 25 expectations, which really should be taken with a grain of salt, but those also are up even stronger than the 11. Last number I saw was about 13%. So the growth expectations are embedded in there, and it looks like companies are going to have to improve going forward. If that is disappointing, then I think that you get a little bit more of a headwind for the market.
Yeah, it's great to see you, Thomas. Thank you so much. Thomas Martin at Globalt Investments. Thank you.